Welcome to your daily solo 401k webinar and Q&A session with my solo 401k financial, where we help you to stop overpaying taxes and start building real retirement wealth. Today's topic is, can I roll over my SEP IRA into a solo 401k? So this is your chance to get answers. So use that chat to ask questions on today's topic or anything else. Chat them over now so that we can be sure to get them all. Let's get started. Are you self-employed and wondering if you can move your SEP IRA into a solo 401k? Great question. Many entrepreneurs, consultants, and small business owners start out with a SEP, but later realize the solo 401k offers more flexibility, higher contribution options, and even the bigger backdoor Roth feature. But the rules aren't always clear, and the IRS doesn't exactly spell it out in plain English. That's what we are going to unpack today. A SEP IRA is simple and easy to set up, but it has limitations. For example, it doesn't support the mega backdoor Roth strategy, can't apply the auto contribution tax credit, and you can't take participant loans. A solo 401k, on the other hand, opens the doors to all of that. Plus the potential to contribute more if you have side income. So the big question is, can you roll over your SEP into a solo 401k without triggering taxes or penalties? Great. So again, go ahead and type over your questions during the daily webinar, and we'll answer those questions as they come in. They don't have to pertain to today's topic specifically. It looks like we have some questions already. Let's take a look at those questions. Let's see here. Looks like we have a question here from Barry. It's surrounding reporting contributions. If a partnership makes an employer solo 401k contribution, is it reflected on the following lines of the K1? So keep in mind that contributions to the solo 401k plan are going to be reported based on how your self-employed business is taxed. So they're different if the self-employed business is taxed as an S corporation, sole proprietorship, or partnership. And we do have a good link on our website that breaks down how to report contributions on your personal and or business tax return based on the entity type. Let me share that link with you now. So take a look at that link right there. That'll help you with your question there. But with respect to reporting contributions for a partnership, it depends on whether you're making employee contributions, Roth contributions, voluntary after-tax contributions, as well as employee versus employer pre-tax contributions. So if it's a partnership, you're always going to report employee and employer pre-tax contributions on line 16 of the Schedule K1. So again, that link I just shared with you will give you guidance on how to report it line by line. So again, if it's an employee pre-tax contribution or an employer pre-tax contribution, you're going to report those on line 16 of the Schedule 1. And also on Schedule K1, line 13, using code R. So it's a two-step process. It's going to be on line 16 of the Schedule 1, which is an attachment to Form 1040. And then also on your Schedule K1, line 13, using code R. That's if you make employee and or employer contributions. And you can see IRS publication 560, page 15 of IRS publication 560. You'll want to look for the section titled Where to Deduct Contributions. So you can find more information on that. Now, Roth employee contributions, those do not get reported anywhere. If we're talking about an employee Roth solo 401k contribution. If we're talking about employer Roth solo 401k contributions, because remember, Secure Act 2.0 now allows you to make employer Roth solo 401k contributions. So if you make an employer Roth solo 401k contribution, various reporting applies. You're going to report it as a tax deductible contribution for the year for which the contributions were made. And you're going to report that on line 16 of the Schedule 1, as well as Form 1040 on Schedule K1, line 13, using code R. But then you're also going to have to report that as a taxable in-plan conversion, because employer Roth solo 401k contributions, while deductible on the business side, are treated as taxable on the personal side. So a Form 1099-R will have to be issued to report that as a taxable in-plan conversion. And it's going to be reported on line 5A and 5B of the Form 1040. So the figures listed on that Form 1099-R will be populated on that Form 1040 line 5A and 5B. So good question. All right, let's keep looking at this here. Looks like we've got a question here from Prabhu. I don't know whether I have filed Form 1099 for tax year with your company. How can I find that information? By the way, how do I file for the 1099 through your website? Well, you might be late to the game, because that Form 1099-R was timely due to the IRS by March 31st of this year. So it looks like you're going to be filing that late. For clients of my solo 401k financial who timely requested, the keyword's timely, who timely requested, we'll prepare that Form 1099-R so that it's timely filed with the government. If you did not submit that to us, then send us an email and we can check to see if you did or not. But there's a form on our website that you would fill out. But in your situation, since you're late to the game, first we got to figure out if you ever submitted an online form, and if not, we're going to have to see what we can do to help you out. So go ahead and submit a support ticket through our website, and we'll take a look at that. Let me go ahead and provide you with that support ticket item here. So here's the link where you can submit a support ticket, so we can find out if you ever, I mean, obviously, if you don't have it right now, that probably means you never requested one from us timely. But submit the support ticket and we'll see what we can do. All right, let's see here. Next question here, if any others. Okay, well, I don't see any other questions right now. Go ahead and continue to type over your questions during the daily webinar. We'll pause and answer those questions as they come in. In the meantime, let's continue here with our daily topic, which is, can I roll over my SEP IRA into a solo 401k? So the quick answer is yes, you can. You can certainly transfer a SEP IRA to a solo 401k. And the reason individuals want to transfer that SEP IRA to a solo 401k is because you have more flexibility under a solo 401k than you do with the SEP IRA. So here's what we're going to be covering. When and how you can roll over a SEP IRA into a solo 401k plan. So you can transfer a SEP IRA to the solo 401k at any time. It's not like a simple IRA, which has a 2-year restriction. SEP IRAs are not subject to any restriction. So if you have a SEP IRA that consists of traditional IRA funds, then that SEP IRA can be transferred to the solo 401k. And that'll be a non-taxable direct rollover. When you move a SEP IRA or a traditional IRA to a solo 401k, where the funds flow directly to the solo 401k, that's known as a direct rollover. So the IRA custodian holding those SEP IRA funds will issue a Form 1099-R to report that non-taxable direct rollover to the solo 401k from the SEP IRA. Now, the benefits of rolling over a SEP IRA to the solo 401k are pretty stark. One, you can process the mega backdoor Roth strategy in that solo 401k. So you can transfer that SEP IRA to the solo 401k, and you can still utilize the mega backdoor Roth strategy within the solo 401k plan. Once you transfer those SEP IRA funds to the solo 401k, you can even convert those pre-tax funds to the Roth solo 401k. Because once the SEP IRA is transferred to the solo 401k, it is no longer subject to the SEP IRA rules. It's now subject to the solo 401k regulations. So you can process an in-plan conversion of pre-tax solo 401k funds to the Roth solo 401k. That's different than the mega backdoor Roth solo 401k strategy. The mega backdoor Roth solo 401k strategy is where you make an annual contribution as a voluntary after-tax contribution, and then you convert it to the Roth solo 401k plan. Some other benefits of the solo 401k over the SEP IRA is that the solo 401k also comes with a $1,500 auto contribution credit, and you are now required to contribute in order to qualify for that auto contribution credit. So the auto contribution credit is only available to 401k plans. It's not available to SEP IRAs, simple IRAs, or even traditional IRAs. What's great about the auto contribution credit is that it's a dollar-for-dollar tax credit equal to $500 per year for a maximum of $1,500 over 3 years. So a self-employed person must have a solo 401k from a provider such as my solo 401k Financial, whose plan allows for that auto contribution credit and also has the applicable schedules attached to it. So not all solo 401k plan providers offer a solo 401k plan that has the auto contribution credit available. And the dollar-for-dollar credit can be added to both new and existing solo 401k plans. It was not available until January 1st of 2024. So if you're a client of my solo 401k Financial, we can add that to your plan. If you're a client of my solo 401k Financial from December of 2023 and prior, you can submit a support ticket and we can add that auto contribution credit to your plan. So with this auto contribution credit, for those who are opening a solo 401k plan for the first time, or even if it's being restated from an existing plan, or even if you have a plan already and we can add it to that plan, that's going to cover the cost to maintain a solo 401k plan for many years. So the $1,500 is basically a government stimulus. So it covers the cost of opening and maintaining a solo 401k, because $1,500 is spread out over 3 years. Again, that'll more than cover your solo 401k fees for years to come. And keep in mind that a tax credit is not merely a deductible expense, but rather a dollar-for-dollar reduction in your business tax liability. So it's much more favorable. Now, once the auto contribution credit has been added to your plan, you don't have to contribute to the plan. So that's one of the misconceptions, because it's titled as the auto contribution credit, but you're not required to contribute to the solo 401k plan in order to qualify. You just need to make sure you open a solo 401k plan with a company like my solo 401k Financial, whose plan allows for it. And you can opt out of contributing at all, and then you can still contribute in whatever amount you want up to the overall limit for the year. For example, the overall limit for tax year 2025 is $70,000. So you can decide to make contributions in whichever amount you prefer, including simply not making contributions. In other words, you are not required to make annual solo 401k contributions in order to qualify for the tax credit. Now, the $500 yearly credit over a 3-year period can be claimed by filing Form 8881. It's a 2-page form. There's only one section that has to be filled out. It doesn't take very long to fill out. You then attach that to your business tax return. You're gonna file that form each year. Form 8881. You'll file it each year for 3 years for $500 each year. So you can claim $500 credit each year for up to 3 years for a total of $1,500. We can also provide you with the video and a PowerPoint that shows how to claim that credit. Okay, so again, that's one of the big benefits of transferring your SEP IRA to a solo 401k, besides the fact that it allows for the mega backdoor Roth, the auto contribution credit, and of course, another big advantage of transferring that SEP IRA to a solo 401k is that you can borrow from the solo 401k through a 401k participant loan. We'll talk more about that in a moment here. For now, let's take a look at this real quick here. Now, if this information is helping you feel more confident about your future, please take 1 second to like and subscribe. It tells the platform this content is valuable, which helps other solopreneurs like you find it. Subscribing guarantees you get notifications of all crucial content that we deliver every day to help you secure your retirement. Let's see if we have some more questions here. So here's a question. How do you max out the solo 401k with the mega backdoor strategy with 70,000 W-2 income? Good question. So that's one of the other benefits of transferring your SEP IRA to a solo 401k is that you can also utilize the mega backdoor Roth strategy within the solo 401k. The SEP IRA does not allow for the mega backdoor Roth strategy. So the way it works is that if you look at this slide on the left here, this is an example of a 1 participant plan. The image on the right is an example of a 2 participant plan. The two participant plan in the image is one where, for example, both spouses are self-employed in the same business. Let's say that Janet and Bill are self-employed in an LLC, taxed as an S corporation. So the LLC would sponsor the solo 401k. So 1 plan, both Janet and Bill participate in that solo 401k plan. So it's just 1 plan, but they're each going to have separate holding accounts, aka bank or brokerage accounts, in the name of the solo 401k to hold their respective fund sources. So here you're going to see a total of 6 holding accounts because the solo 401k plan allows for pre-tax solo 401k contributions, Roth solo 401k contributions, and of course voluntary after-tax solo 401k contributions as part of the mega backdoor Roth strategy. Hence why you see 6 holding accounts, because both participants are self-employed in the same business. Now, again, it's not 6 separate solo 401k plans. It's considered just 1 plan, but because a solo 401k is a defined contribution plan, meaning you have to separately track each participant's funds and each source of funds using separate holding accounts, aka bank or brokerage accounts, all in the name of the solo 401k. So 1 solo 401k plan, 1 employer identification number, which is for the solo 401k, because the employer identification number, aka EIN, is for the solo 401k, which is a retirement trust. So when the bank accounts or brokerage accounts are opened in the name of the solo 401k, they're going to be opened up under the same plan name, same EIN number, but each bank or brokerage account will be separately titled in each participant's name, and it'll have the word Roth, pre-tax, and voluntary after-tax after each respective bank or brokerage account to track each participant's funds. Now let's hone in on this 1 participant plan for your question here. So if your self-employed business is taxed as an S corporation, then that means that if we're talking about tax year 2025, the overall contribution limit to a solo 401k plan for tax year 2025 is $70,000 for someone who's under age 50. If you're age 50 or older, you get a catch-up amount of $7,500, increasing that annual contribution limit for tax year 2025 from $70,000 to $77,500. Now there's the super catch-up contribution effective for tax year 2025, stemming from Secure Act 2.0. That's only available to a certain age group. Those who are age 60, 61, 62, or 63 in tax year 2025, instead of making a $7,500 catch-up contribution, they can instead make the $11,250 super catch-up contribution. You can't make both, obviously, but if you fall within that age range, and if you make that super catch-up contribution of $11,250, now you're going to be able to contribute as much as $81,250 in solo 401k contributions for tax year 2025. Now, with regards to the catch-up contributions as part of the with regards to voluntary after-tax solo 401k contributions as part of the mega backdoor Roth strategy, you can never make the catch-up contribution to that mega backdoor Roth. So the $7,500 catch-up or the $11,250 super catch-up, those can never be deposited to the voluntary after-tax solo 401k bucket. Instead, for tax year 2025, you can deposit the catch-up amounts to the pre-tax solo 401k or to the Roth solo 401k bucket. So back to our slide here. So if you're under age 50 and you want to maximize the mega backdoor Roth solo 401k strategy for tax year 2025, then you're going to need to pay yourself a minimum of $70,000 of W-2 wages from your S corporation or LLC taxes and S corporation. So the gross wages, box 1 of that W-2, will need to read at least $70,000. You can then contribute that entire $70,000 to the voluntary after-tax solo 401k bucket, so this bucket right here, and then it can immediately get converted to the Roth solo 401k bucket. And now you will have maximized your maximum mega backdoor Roth solo 401k strategy for tax year 2025. And if you're age 50 or older and you qualify for the catch-up contribution, you can make that directly to the Roth solo 401k or to the pre-tax solo 401k. So good question there. Okay. Let's see here. No, I'm not going to share the link yet to request a 1099-R because yours is for 2024. So the link that we currently have is for 2025. So we're going to need you to submit a support ticket so that we can find out if one was ever issued for your plan or not. If it was not, then we'll make sure to determine what we can do to get that issued. All right. So let me share that support ticket again. Here's a support ticket there. All right, let's see here. Good questions there. Let's continue here. Let's go back to, so we're talking about, can I roll over my SEP into a solo 401k? And we already answered that question, which is yes. We've been talking about some of the benefits of transferring that SEP IRA to a solo 401k. Let's pick up where we left off. So another benefit of transferring your SEP IRA to a solo 401k is that a solo 401k plan allows for a 401k participant loan. That's one of the big differences between a solo 401k and any type of IRA, whether it's a SEP IRA, simple IRA, traditional IRA, or Roth IRA. That is that you can borrow from a 401k, but you cannot borrow from any IRAs. So with the solo 401k, it allows for a solo 401k participant loan. And the way that works is that you can borrow 50% of your total solo 401k balance. So if you transfer that SEP IRA to the solo 401k plan, those will be considered solo 401k funds, and then you can borrow from the solo 401k. And again, you can borrow 50% of the total solo 401k balance up to a maximum of $50,000. So let's say you transfer a SEP IRA worth $100,000 or more to the solo 401k. You can then borrow a maximum of $50,000 through a solo 401k participant loan. Another example, let's say you transfer $50,000 from your SEP IRA to the solo 401k. then the maximum you can borrow would be 50% of $50,000, which is $25,000. Now you have to make sure that specific loan documents are prepared. In other words, you can't just type up your own note. You can't just write it down on a napkin. Specific loan documents have to be drafted pursuant to the IRS regulations. And if you are a client of my solo 401k financial, we'll draft those loan documents, those solo 401k participant loan documents at no additional cost, along with the payment schedule. You pay back over a 5-year period. Now, if you borrow for if you want to borrow for longer than 5 years, then it's only available for a longer period of 5 years. It can be as long as 15 or 30 years if the loan proceeds are used towards the purchase of your primary residence. That's referred to as a primary residence solo 401k participant loan exception. If you borrow for all other purposes, then the maximum loan period is 5 years. With regards to the interest rate, number one, the interest goes back to your own solo 401k, so you're paying your own plan back. So you're obviously borrowing from your own solo 401k. You're paying back your own solo 401k with principal and interest. The interest rate is typically 2%, a CD rate plus 2%. It's got to be a competitive CD rate. But the most popular one is a prime rate, so whatever the prime rate is plus 1%. The interest and the principal go back to your own plan. The interest is fixed, so it's not a variable rate, it's a fixed rate for the life of the loan. And you have to pay it back monthly or quarterly. So it's not a balloon payment. You have to pay it back periodically in monthly or quarterly payments over a 5-year period. If the proceeds are used for any other purpose besides towards the purchase of your primary residence. There's no credit check because you're borrowing from your own solo 401k, so there's no credit check that's applicable. And again, the payments are level, meaning you have to make them periodically, monthly or quarterly, and the payments are fixed. So that's another reason why we find individuals transfer the SEP IRA to a solo 401k, so that they can borrow from the solo 401k plan through a participant loan. Okay, I think we're coming to the end of our webinar. If you have any other questions, go ahead and ask those questions now. In the meantime, make sure to visit our community where we have over 30,000 members, and you can post forums if you're a financial professional like an advisor, CPA, insurance agent, real estate broker, any type of professional. You can even join the community and post guest blog posts. And then you can link that guest blog post back to your company's website. So that way our 30,000 members can visit your website to see what services you provide. Take a look at also at our artificial intelligence page. And of course our YouTube where you can access our video catalog with over 900 videos there. All right, that's it for today's solo 401k session. Thank you so much for investing your time with us. Your time is valuable and your retirement future is worth it. So if you haven't yet, please like and subscribe so we can keep building this community. We'll be back here tomorrow with more crucial content to help you secure your retirement.